Good evening, everybody, and thank you for joining us for the fourth day of our webinar series, How to Trade in the Forex Market, presented by Abayomi Oyeshola. So thank you for coming, and it promises to be a good ride as usual. So in the past 3 days, we have covered a number of things that will actually help you to become better with trading. Excuse me. All right. So the first thing is that we've discussed on how if trading is dependable. If you can depend on trading in the early days. And then we talked about how to plan your trade and how to trade your plan, where we talked about the importance of journaling, and then we asked the question, which one is better, trading personal funds or prop accounts? And in my opinion, trading personal funds is actually better, but if you are able to scale through with prop firm accounts, I think that prop firm accounts will give you the big money you are looking for. That's if, by God's grace, you are able to escape all those their nonsense rules and their policies, right? Okay. And then on day 2, we talked about the psychology for day traders to avoid over trading, right? And so when the recording is available, I would like you guys to get it to listen again. Really, I think this webinar series is something that is worth listening to again, is worth watching again, and listen to it again. Because you are going to, sometimes important information like this, you might not get them at once, right? But when you consciously listen another time, you are going to get more, and then I will actually recommend that if you see that anything is of value to you, if anything is important to you, you try as much as possible to go through that thing, like you be systematic about it. Maybe you go through it once a month or once in a quarter, that is in 3 months, or once in 6 months, once in a year. Just remind yourself of some things. There are some information that we listen to, we get those information, and when we got them, yeah, we were happy about them. We felt like, okay, I've learned something. But with time, the things of life, they seep in and take those things away from you. Like it will be as if you've never listened to them. You just be left with fragments of them. So when you listen to something the second time, the third time, the fourth time, you are going to get new things that have been discovered. You are going to see it, right? Okay. And then the next thing we said we were going to talk about was risk management and scaling up profits on your funded or prop account. So that's what we're going to be talking about today. So yesterday I invited UCT to teach us about these things here, marking out POI and liquidity, to recommend the best prop firms, to recommend the best brokers, and the requirements for KYC. Okay? And how to trade a prop firm from purchase to funded. Actually, to be honest, excuse me. Sorry. To be honest, I was not present for most of the class. Yeah, I was connected, but I wasn't actively following, of course, because I was not presenting. It's not supposed to be, but I apologize for that actually. So I would like to know, did EUCT touch on how to trade a prop firm from purchase to funded to withdrawal? Did it talk about it? I just need your response. You can unmute yourself and respond. Or you can drop it on the chat. Did EUCT talk about number 5? Excuse me. I don't know if you guys can hear me.
Yes, sir. We talked about it.
All right. Okay. Thank you. Okay, so I don't think there's any need for me to go through that again then. Maybe except I want to touch on a few things. All right, so let's go into the business of today. And the business of today is well, considering trading personal funds or a prop firm account. Okay. Oh, sorry, we've done this. Sorry. Okay. Risk management. We are talking about risk management and about scaling up profit on your funded or prop accounts. Okay. And I always say something. The most important thing in trading is the skill of trading. In forex markets, in forex trading, your most important skill, your most important asset is the trading skill that you possess. That's the most important thing. After that, the second important thing is your capital. You have capital. You have capital to trade, right? Then after that, actually, I can compare it with the skill, but I want to kind of to kind of make it stand alone. That's the risk management, your risk management skill. Like I say that's the third important skill you need in the forex market. Right? So like I said again, the first thing you need is the skill of trading. A profitable, the skill of trading profitably. Let me add that caveat. The skill of trading profitably is the first and most important thing about trading. The second thing is your capital, right? And the third and even more important thing is risk management. Now, a lot of traders know how to trade, but they don't know how to manage their risk. If you are a trader and you find out that you lose accounts constantly, you lose your account constantly, it means you've not mastered risk management. Actually, it means number one, either you have not mastered, either you don't know how to trade profitably, or you are emotional in trading, like you trade emotionally, and both of those things can be, you can reduce them to risk management. Your risk management is out of place, your trading will be out of place, and you don't want that to happen to you. Okay? So I said managing your risk is the most important aspect of trading, and you want to make sure you do it correctly. Okay? Number one, you must have a predefined risk plan. A predefined risk plan. You must have it. You need to have a predefined risk plan. See, I know everybody is tempted to, you want to make a fortune in the market, but that's because you are still seeing Forex as a sprint, right? It's because you are still seeing Forex as a sprint, not as a marathon. You are seeing Forex as a get-rich-quick scheme. That's why you want to make all your money at once in trading. And that's not the good thing to follow, right? You don't want to do that, actually. Because, see, let me say I'm in this position in my life where, yeah, if I should make money today, I will thank God. I'll be happy about it. But then I'm not so happy about it to the extent that no matter what I make, I'll feel like, oh, I'm settled for life. No. And if I should lose money, I'm not thinking, oh, I'm done for. Is this Forex going to feed me? Is it going to? I'm not thinking that way. All right. Like that's the stage I am right now. Right? Because I remember I was talking with a friend, like I made a new friend today, and he's a forex trader. Like in fact, I would say he has more knowledge than me. I don't know if he's more profitable than me, but I think he has more knowledge than me about the forex market. Like he has his theories, he has studied under several mentors, and he's very, very good. His name is Tokbe. Very, very good trader, right? But okay, why did I even mention him? Uh, I've forgotten why I didn't mention him, why I delved into that little bit. But what I'm trying to say is that risk, like, um, okay, like you take forex not as a sprint, but as a marathon. Like it's something that is progressive. The fact that you lost money today does not mean that you will not be profitable tomorrow. Okay, okay. So this was the reason I brought up my discussion with Stockwell today, and it is that like both of us were sharing experiences in trading, and I told him how I used my last 50,000 naira. There was a point in my life that I had, like, I did not even have anything before. And then, when you don't have nothing, and then you were able to just get a simple 70,000 naira, right? And okay, you just felt like, oh, I need to sort some bills quickly, and use 20,000 naira to sort your bills. And then you put 50K inside your trading account. And then, back, 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 50K became 220K, right? I think that's amazing, right? And that was just my experience. Just something that it has not just happened once, it has happened a lot of times for me in this market, right? So I know that, okay, if my head is in the right place, I can actually make money. If I take care of my risk management, I can make money from the market, right? So I'm not, those times of bailouts that I just felt like, oh, this is like this, if this 50K goes, that's all, right? And the success that emanated from it made me realize that, okay, there is a lot of possibilities that are in this market. I'm telling you that this is not something that has happened once or twice. That happened several times, right? So I just know that, okay, if I have a bad day in trading today, I sleep, I wake up. I don't want it to affect my thinking in fact, I begin to pick my phone. If there's a bad day, call the important people in my life, talk to them, you know, and then if possible, if I might even go out, just to chill. I don't want to pray, talk to God, do the usual things I am supposed to do, right? I don't want those things to take it too long, because I know that, okay, today may be bad, tomorrow will be better. But um, I'm saying all those things to tell you that, okay, since Forex as a marathon. So if you know that Forex is a marathon, you want to risk carefully. Yes, you are taking risk. It's good to take risk. You're a risk taker, but don't waste money. Don't wait. The way I equate Forex to now is that, okay, if I'm losing money, like if I'm losing something I'm not supposed to be losing, it's probably because, okay, I don't say it's if I'm losing money, if I'm losing the amount I'm not supposed to be losing, that's a waste of my time. I'm wasting my time, and I'm wasting my opportunity to capitalize on the gains of the market, right? I'm wasting, and then I'm shifting profitable days forward. Like someone can make profit every day. You can make profit. I'm not saying, okay, audaciously, or I'm not saying, okay, this in an audacious manner or something. Yes, I believe you can make money every day, but okay, even if you have bad days in the market, you have bad days in the market, you can still make much money than the previous day. You can make it on another day. You can make it tomorrow. You can make it next week. So why don't you want to now have a risk plan? if you know that, okay, you can always make money, you know that, okay, the most important thing to protect is your capital. If you can protect your capital in the market, you can protect your mental health. And that's a fact. The reason why people get paranoid, why people get anxious, why people become restless is when they see that their capital is dwindling away, their money is going, or maybe they have made money, they've made profits, and then maybe the profit they made in 2 days or in 5 days, the market wiped it away in 30 minutes, right? And, people become fidgety, but just cast your cares upon God, yeah, and then you risk accordingly, you risk properly. You don't want to, don't be all jumpy. See, the kind of money that you see, I'm also on Twitter and I see a lot of things that go on Twitter, and yeah, I appreciate what those guys are showing, because I mean, those guys that stack up a lot of positions, people that flip $1,000 to $100,000 and all. Yeah, it's a good thing, right? And I like that those people show it, because it reveals that it is something that is possible. When you flip $100 or $250 to $17,000, it means it is possible. Anything is achievable in the market. That's what it shows. But if you know that you are still, John Cannon, what do I mean by that, for the sake of those who don't understand Yoruba? If you are not well fed, you now want to use your last 50K, you want to bet everything on it. What if it goes out? If I were you, this is what I would do. That 50K, excuse me, that 50K, I want to turn it to 500 to, let's first be realistic, turn it to 100K, turn it to 200K, turn it to 400K, 600K, gradually, of course. As I'm making it, I'm making my withdrawal. And then I'm putting some in the reserve that, okay, in case something goes wrong, I just want to make my budget 100K sorry, 50K for now. Then after some time, okay, you might want to scale up from 50K to 100K. Now, if you are scaling up capital, make sure you are scaling up your risk also. Or you don't, either you scale up your risk just like proportional to your capital, not exorbitant. This is what I mean. If you are using on a Naira account, for example, if you are using 0.01 to trade, and you've successfully used 0.01 lot size to take a $50,000 account to $100,000, right? To $200,000. Now, whenever you want to scale up that capital, now you can scale that capital such that, I'm sorry, when you scale your capital from $50,000 to $100,000, if you want to scale your risk, you can either keep your risk at that 0.01, or you scale it, but you don't scale it more than 0.02. So it's not that, you now feel like, I have a bigger capital. That's now that you have $100,000. You now feel like you can use 0.05. No, that's you biting, that's you boxing beyond your weight class. Don't do that, please. Don't do that. Forex will always be there. See, if you have a bad day today, you might have a good day tomorrow. That's just the truth. Okay, maybe just to encourage a few people, I experienced something last week. I can't remember which day. Was it Wednesday or Thursday? I think, yeah, it was Wednesday, during the day of FOMC. I took some trades on gold, and that day I made how many percent? I made about 55% of my trading capital, right? And then the following day, either the following day or the day after, I lost about 100% of my capital. So now imagine I made 55%, about 55% or 60% of my capital. And then by the following day, of course, I made a withdrawal. I withdrew money, and used money for things I needed to do. And then the following day or the day after, I traded and then I lost about 100% of that profit I had made, not 100% of my capital, like 100% of like I lost times two of my profits, right? From the market. That my account was not looking very nice, you know. And that day, you know, anybody, like anyone could have been very, very sad. But I make sure, like just what I said, what I taught you, was it the first day of the webinar or the second day, that just keep your emotions in check. You don't have to be afraid. Like, if you know that, okay, tomorrow I'm going to, the first thing is, okay, when those kind of issues happen, I know that, okay, I had fucked up, I had messed up with my risk management. And that was the cause. You can see, the market is manipulative. I was manipulated into, actually, I was not supposed to take the trade at the point where I took it. And if I'm ever going to take the trade at the point where I took it, I was supposed to manage it, to put a risk. But you know, because you have won, you have called good shots and they've won, you now feel like, oh, there's no way on earth this thing will not go this way. That was my mistake. That was my error, right? And the sad thing was I was not even looking at the charts. I also checked back the charts and I saw that the market had dropped by 250 pips. I'm talking about gold. You know how crazy gold can be, you know, that day. And I was like, what the, like if I had known, I could just have put my, like the place where I put my stop loss was too wide because I just felt like there's no way it will touch it. But lo and behold, my brother and sisters, it touched it. It hit my stop loss and I was I was I wasn't happy, right? But I tried to still be myself. You know, I was just like, okay. The painful thing was not because I lost the money. It was because, or it was not because that, okay, I don't feel like I can make the money. It was because I wasted building momentum on what I had already gained. I did not work with good risk management. That was what I was not happy about, right? And then I had wasted my time successfully. Like, okay, I needed, yes, of course, I needed the money. I know I was going to make back the money. And you know, in this week, I have made, like, the remaining of my capital. I think I have almost times three it, like trading this week alone. Almost. It's just like I've like multiplied the remaining of capital. I've made more than 200%, essentially. That's what I'm saying. I've made more than 200% of my capital, right? But you know, I could have made more today. I could have made, okay, let me say what I've made today. It will have been a build up on what I made last week. If I did not, if I did not do bad risk management, right? So don't be so overconfident with the market. Don't say, oh, there's no how it will not get, there's no how it will get to this place. It is, we are dealing with Forex. Anything can happen. So you want to put a reasonable stop loss, depending on the strategy you are trading. The reasonable stop loss, depending on the strategy you are trading. You know, we're not talking about strategy in this class. We are just talking about how to succeed with Forex generally. So manage your risk, have a predefined risk plan, follow that plan. And in case you get carried away, be quick to get back on track with your risk management system. So how did I win that trade back? How did I succeed back? It was because I just know that, okay, I need to manage my risk effectively. And, you know, in fact, if I was busy today, probably I could have made more money today, you know, but I stopped trading around 11 a.m. today, you know, because I was so engaged. A friend of mine is getting married and I was helping with preparations and everything, running around with car. So what I'm saying essentially is that please and please, you want to be careful. You want to to have a good risk plan and follow through with that plan. Okay? And in case you get carried away, be quick to get back on track with your risk management system. Okay? So the next thing I want to talk about is scaling up profits on your funded or prop accounts. How do you scale up on profits? Okay, number one is that if you did not catch a trade at the peak formation, it is best to stay out of it or enter with a very small risk. You did not catch a trade. There is this point, every strategy always have a point of interest, a point, and you have an entry point. There are things that you see and you know that, okay, this is a point for you to enter. Now, if you have missed that entry, you don't need to take that trade. Someone said trading is like a train. Trading is like a train. If you miss one, don't worry, another one will come. So don't start beating yourself. Maybe you saw a trade that trade yielded 500 pips, and you have already done your analysis, but for whatever reason, either you've set your pending order, it did not take you in, or you slept off, or you were distracted and you did not see when it happened. Leave it. Another boss will come. Another opportunity to enter the market at your peak formation will come. Just stay out. Or let's now assume that, okay, because we should be realistic, there are some people, see, the ideal thing is that you should stay out, right? But now let's say, for example, that there are, like if you now want to enter, you want to risk, don't risk it all. If you want to risk, you want to take a risk. Oh, yes, this thing has passed my peak formation and I want to enter the trade. But you don't, what do I say? Like, you don't jump all in, right? You want to risk very little of your capital, right? And if you are going to risk very little, that means number one, your lot size is small, and then your risk management is on point, right? Just like, okay, in case this thing eventually goes my way, okay, at least I will take a little profit. And in case I'm going to lose that money, I'm going to lose that trade, I'm going to make only a small loss, right? So please and please, I want you to take note of that. The second thing I want to talk about is that, however, more important than taking risk is managing the risk like a professional, okay? So what was the professional way of managing risk? It's about risking as little as you can per time, or as much as you can per time, right? Risk as little or as much as you can per time, but always make sure that, okay, every trade has a stop loss, and it's not a very wide stop loss. Of course, depending on the kind of strategy you are taking, right? So you want to be very, very careful. Okay? Those people that you see, they stack up positions, it's more likely that that's not the only money they have in their life. For someone to bring out $200, in Nigerian economy, and put that $200 in trading, and then begin to trade it, and he was able to carry that $200 to $5,000. Yes, it's a good fit. It's a great fit, but it's likely that that's just the strategy the person is trading. He just takes a little amount of his net worth and then trades it, scales up. But what you don't see is you never see anybody screenshot, you never see anybody screenshot when they lose their $200 by stacking up positions. Nobody screenshots it. Nobody sent it to their WhatsApp and to their Twitter handle, right? To their Twitter page. No, nobody does it. I don't think I've ever seen, right? People don't show when they are $200, they are $1,000, they are $500 when it becomes $00. But when it becomes $23,000, when it becomes $128,000, they talk about it, right? So you don't want to get yourself deceived. You don't want to get yourself don't live in another man's world, essentially. Manage your risk comfortably, manage your risk well, right? So scaling risk is riskier than a lot of traders think it is. Okay, sorry, I think I wanted to write scaling accounts, or scaling trades rather, like adding positions is riskier than a lot of traders think. The fact that you see people get lucky with it does not mean that they get lucky every time. So you want to be very careful. You want to be careful, about adding positions. I mentioned something 2 days ago that if you are going to trade, right, any position you want to add, and also any position you want to add, let it be from your risk, from your peak formation, right? Let it be at your peak formation. You put, okay, I'm expecting gold to buy at 2150, right? And you place your buy, you place your buy limit. But as you are placing your buy limit also, put your stop loss. Remember, always remember that your stop loss and your TP, put them, right? And after you have done that, you want to, if you have to add positions, it's not, if you're adding positions to it, number one, you make sure that you are breaking even the ones that are already running. That's how to add positions, right? Okay, I took a trade, for example, if I should take a trade at gold from 2150, right? And I put my stop loss as 2145, for example, right? Now, gold moves up to 2153. It has moved up by 30 pips, right? And then I had another position. And then it moves up again by, let's say by 50 pips. That is gone to 2158. And I had another position. Of course, before I can be adding positions, I know I must also understand that, okay, this is not a short buy. I mean, this is not just a short buy or a short sell. I'm trying to buy, I'm trying to scale up because I know that, okay, the destination of this thing, either today or tomorrow, or till tomorrow rather, or till 1 week time, is going to get to the required destination. It's going to get to my expected destination. So I want to scale responsibly, one after the other, right? And as you are scaling, the moment you had, let's say, our first trade was 2150, the next one was 2153, the next one was 2158, and I'm expecting that good is going to get to 2200, right? So each, my first initial stop loss was 2145. I must move that stop loss from 2145 to 2150 for break even, right? While I am adding a new position, right? Of course, you want there to have been like a long space, but make sure the market has gone substantially high enough, like let's say 100 pips, 150 pips, before you now say, okay, I want to, you are not breaking even your trade. Break even each of your trades as you're scaling them up, break them even, break them even, so that in case there is a drawdown, the thing decides to now turn against you to go another way, you are not losing so much. Maybe you are losing maybe just about 1 or 2 trades of the 3 or 4 that you've picked, right? So that's what I'm talking about. So please and please, always risk with wisdom. So opportunities are best taken during peak formation areas is basically to protect your emotions from flying up and down like a yo-yo, right? So opportunities abound in the market, but you take them at your peak formation. Take opportunities at peak formation. It is not when you feel, you enter the middle of a trade, the middle of a running trade, the trade has picked up maybe by 100 pips. That's when you now jump in. That's not trading, that's gambling. See, those are the things that they call gambling. Trading in itself, trading is very, very calculative. Like you have a mental model for doing it and for doing it successfully, right? So you want to do it correctly, right? Opportunities are best taken at the peak formation. I mean, big opportunities to scale up profit, right? Then the fifth thing I want to talk about before I entertain your questions is that your emotions, sanity, and frame of mind are your most important tool in trading. Do not let anything infringe upon them. Your emotion, sanity, and your frame of mind is your most important tool, right? Your emotion, your frame of mind is your most important tool. When you are losing or when you've lost, you don't let that thing get into you, because you will need that mind. You need your mind again tomorrow. You need it again, right? So you want to be very, very careful. So that's all I'm going to talk about today. And I'd like to entertain your questions in the next, how many minutes? in the next 13 or 14 minutes. Okay. So please, if you have a question, you can raise up your hand or you can drop your question on the chat. Well, thank you very much. You're welcome, Mr. Joel. Anybody raising up their hand? Okay. It seems like our people they don't have any question. So let's interact. How was trading today generally? Did anyone trade anything today? Okay, Mr. Okoro Victor is raising up his hand. Okay. So if I unmute yourself, Mr. Okoro or Mr. Victor.
Good evening, sir.
Good evening.
Yeah. My question is concerning risk reward ratio. Some mentors say that we should use 3-1, 1-4, 1-5. While some said we should set our risk reward ratio, our TP and stop loss based on highs and low of the market. So that risk reward ratio, I don't really understand what it means, sir.
Okay. Okay. Our risk reward ratio is for you to set your stop loss and your take profit. You are not, what you want to get from a trade is I apologize for change. Okay. Okay. The reward you want to get from a trade, that's your TP. You want it to be far greater than the amount, how much you are risking. So let's say in my heart or in my trading plan, any trade I pick, I'm only risking $100. Tentatively, that's just what I only risk $100 whenever I pick a trade. Now, if I'm going to trade that amount, that $100, what's the lot size that makes that $100 that's calls for that $100 risk? Now, if I'm risking $100 with a particular lot size, now what is my potential profit? How much am I expecting to make? Okay, with the analysis I've seen in the market, I'm expecting that, okay, I should make $300 from this market. So that's what? 1:3. You are risking $100 to make $300. So if the market should go your way and it's your take profit, that's what? It is your take profit. That's you have made $100. You have made $300 without your $100 going. But if the market does not go in your favor, it means you have only lost $100 from your capital, right? So you are looking for another higher quality trade to make up for that $100 or to increase your account to make more profit, right? So yeah, and then those who talk about the high and low something. How will I put this? So it all depends on your perspective. It depends on the kind of mentor you have, and it also depends on how exposed you also are to the market. How exposed are you to the market? How knowledgeable are you about the market? So I'll tell you for a fact that this week, okay, I've traded my most traded pair this week it has been gold. I've traded gold to this week a lot, and I don't even remember looking at risk reward ratio. What I was okay, this is my entry position. My stop loss is I can't even remember. I can't remember where I put my stop loss. But I know that my take probably is far higher, right? So I take it from it eats either it eats my TP or I close it manually, and then I take another trade. If I see another opportunity, take it from and then eat it. So I'm not, this week I've not really thought much about risk reward ratio. But you know, if you're a starting trader, if you're a budgeting trader, I think you should take risk reward ratio very seriously, especially if you are working with the two-line strategy. Risk reward ratio is very, very important, right? So that you not blow yourself. But I have other strategies that I use sometimes, you know, for different things. So um so I have not really been taking note of risk reward ratio that much. But yeah, as long as the pulse is fat, I'm okay. Really. Okay. So yeah, someone said gold was mad today. I tell you, gold was mad. I've been waiting for this since December. I've been waiting for what happened today since December, and I'm very, very happy I was part of it. So I think I took gold from yesterday night around 2178, and I was able to take it up to 2206. That's almost 300 pips, if I'm not mistaken. So yeah, thank God, thank God, thank God. Yeah, someone said thank you for the class. Thank you very much for coming. Everything is clear. That's good. Thank you. All right. So Mr. Okoro understands. Thank you very much. So if you have no other questions tonight, I think this is where we draw the curtain for today. So thanks for coming, and I wish you guys a very good night rest. Okay. All right, good night. I don't know if, okay. All right. Thank you very much. Good night, everybody.